Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love is kind and just. When you're in love, a smile is always on your face. You feel good about yourself, and because you're happy, you are kind. Love is also just. When you make a mistake, you pay only once for that mistake. Market-wise, let's take a look at it out here. We had the Dow Industrials down 254. NASDAQ off 5. S&P's down 21. We take a look at the volume out here inside the NYSE, folks. What you had is that we came down with 852 million versus 945. Bottom line, you go over to that S&P. What that is that that's a low volume pullback. The SPYs did 78 million versus 167. And what that sets up, bottom line, this bounce isn't over yet. We go into the NDX 100. Now, if you want to see something pretty cool, so you had all the indices on Friday had failed on price, failed on volume. They were all going into the downdraft from February 5th. You had the NQs, the 3Qs, NDX 100, and the composite all fail once again. The 3Qs got to a high today of 166.68. You did 35 million versus 105 million. Versus on Friday, even 62 million. 62. So you get the failure there. Let's go to the IWM. We look at the IWM. IWM pulled back with 23 million shares, and you're coming into, oh, this is interesting. You're coming into 23 million and 36. So the IWM, you can say that you failed, then you did come back with some volume. Dow Industrials, however, S&P, no, you pulled back down. So what do you have it? So we get divergence. The divergence would be that the NDX tested the high, failed again, light volume. That says it wants to pull back. S&P comes down, light volume. That says it wants to go test highs again. Dow came down, light volume says it wants to go test highs again. So what I expect you're going to have here, when you take a look at the calendar, we're going to be at the end of the month before we know it. This is the shortest month, of course. Right now, we're dealing with the 20th. Bottom line, before you know it, we're going to be at the end of the month. We're going to be at window dressing. I expect you're going to have to build some more cars in order to get to lower price. Some of the higher volume stocks out here today, you had Walmart was the monster. That basically missed numbers. The margins came down as it's trying to catch up with Amazon on the net. Walmart came down 10%, down $10.67, trading at $94.11. If we do look at Walmart, what you're going to see is that Walmart is now into the gap from its gap away the last time that it came out with numbers. Any close under $94.72, which we closed at $94.11, sets up this gap's going to get filled. The bottom of this gap is $90.85. I expect we're going to be down there tomorrow. He did 50 million shares in Walmart. Now, if we even come down with 25 million tomorrow, Walmart normally does all of 7 million, 8 million, 5 million shares. You start coming down into this gap with that type of volume, meaning even half the volume of today, you'll see this Walmart will get down into the $79 level. We pull this back, and what you're going to see is that the bottom of this strength here is 89. You break 89, then it puts game on for 79. So Walmart definitely has some challenges ahead for it. The number to really keep your eye on is this $90, because if we break the 90, then game is on for a much, much lower price on Walmart. And that is one monster hit for a stock that's so large. AK Steel down 15 cents. You had Apple off 58. Qualcomm was down 86. Qualcomm put a new bid in for NXP Semiconductor, $127. NXP was up $7, trading $125.56. You had Twitter down 22 cents. Applied Material, that was a winner out here today. That was up $1.73. Facebook down $1.35. If we go over to Facebook and we take a look at Facebook, Facebook looks like it's going to go after this high. Well, Facebook has a nice high volume low at 161. I suspect that 161 is game. Notes and bonds. So notes and bonds have been trying to catch a bid. Well, not catch a bid for 2 months. They've been going down for 2 months. We'll see whether this is going to be the beginning of some kind of a dead cat bounce, or does it have something more than that behind it? Because what we did out here today is this. Last Thursday, you had rejected lower price. Volume wasn't bad. We go higher, and we didn't have strength as we went higher on the Friday. Bottom line is that you came into this level, tested it again. Today we tested the low at 1.5 million contracts versus 1.8, and 1.8 is light volume because the bottom line that was breaking 2.8. So when you test like this, it's like, okay, now it's going to have a shot to have wide price spread, to have volume behind the move in order to basically see if it get a bounce going. That was your 10. If we take a look at the 30-year set up the exact same way. 30-year out here today got to a low of 143.14. This went up 16 points from that. We did 320,000 contracts inside the 30-year. That was going into 443, as well as 417. So you can see you went into it slightly higher high. The way that it looks to me is that we are going to basically try to get up into higher price, lower yield. Once again, the real question is going to be, is that just going to be a dead cat bounce, setting up a larger ABC structure down, or is it going to have some juice behind it? King dollar. What do we have with King dollar? King dollar last week had rejected lower price. We are up 627 ticks. Now, this has volume that is anemic. You're going into 39,000 contracts. We did 17,800. That being said, I do expect you're going to get to at least the lows of the high of this last swing high up here, which is 90.005. The high is 90.450. But you can see it loses volume each and every time it tries to get any type of upswing going. Just contracts in a huge way. Dow Industrials finished down 254. Nasdaq off 5. S&P's off 23, 21. Coming right back, folks.